Right. So it looks like we have some people joining. We'll get started here in just a minute. I am having a little technical difficulty on my end where I can't see how many people are on. But it looks like we've got enough folks joining, and I know we only have a half an hour today. So I'll go ahead and jump in, and we've got a couple things to cover before we get into the meat of the presentation. So hopefully some more folks are able to hop on. I'm Savannah Krieg. I am the Senior Director of Strategic Solutions here at Infinicept. Here to talk about the responsibilities for risk and underwriting, as well as a couple of other considerations from the business side when thinking about what payments model to go with when you're adding payments to your business. I did want to caveat, I noticed that there were some actual risk experts who are joining the call today. And the demystification part is really geared towards your sales counterparts. And so if there are areas where you're like, gosh, we know this, that is because you are underwriting experts. And so happy to answer any questions and happy to take things back to Dan Spallinger as well, who can speak in more detail on any underwriting and risk questions that pop up from the risk side of things. So without further ado, I will pop into this. So to kick things off at a very high level, one of the big requirements for onboarding new merchants is the entire underwriting process. So as a payments company or as a company who's offering payments in some form, when your merchants are going and getting approved, all of these things in this process will happen no matter what. And I'm going to share a little bit later on who's responsible for each of these things, but you'll collect a merchant application. You'll do some pre-checks during the application process, and then underwriting will be run on that merchant. In the world of Infinicept, that's automated underwriting. So the merchant application is submitted, the underwriting occurs, and then in a perfect world, that merchant is automatically approved and onboarded, and we skip the manual underwriting step you see in this maroon color here, and you go straight to application approval and sub-merchant setup. In some scenarios, there will be different things like either an account that pens because there's an actual issue with the merchant, and you would go ahead and, or your underwriting team or whoever is underwriting would go ahead and decline that account. And then there are other scenarios where, someone might have fat fingered their address, and you as the seller of the software that's getting coupled with this payments would know, hey, I actually went to that address or went to this person's address to sell them this payments offering. And it looks like they fat fingered their address. And in some of the models, you'll have the opportunity to be the one to go to the merchant and say, hey, it looks like you fat fingered your address. We're going to need a little bit more information. And that gives you agency to get things going more quickly. And then in other scenarios, you might be waiting on your payments provider with little to no visibility. And this is all super important because literally every member of the payments ecosystem cares about this. So The card networks are the ones who actually make the overarching rules and requirements that govern the different models. And by and large, between Visa and MasterCard, those requirements are fairly aligned. There are some small things like limits for tri-party agreements and other minimal items where they differ, but their rules also, sponsor bank actually sponsors these different types of payments programs, be that a referral program where the merchants are really theirs, all the way over to the most involved end of the spectrum for the software company, which is the payment facilitator model. And then from there, you, the software company, and I have payment company here, but as you add payments to your business, you become both a software company and a payment company, will submit policies and procedures. And that sponsor bank will say, yep, these align with what we are required to do by the brands, or they will say, hey, we actually need this, and this to be compliant and allow you to run this program. And then lastly, of course, there's the merchant, and the merchant gets this service from you, and they have some level of expectation, right, that you are doing all the right things to keep the ecosystem safe. So then once you've completed sort of the underwriting process, and I want to actually cover off on one more thing. When you are underwriting, there's some key things that you're looking for. So you're assessing KYB and KYC, and you want those things to be aligned. So if you are assessing a business and you're saying, this person says they own this business, this is their address, and this is very strange, but the Wizard of Oz is living in New York City, and this gift shop is in Kansas. And then you might be able to extrapolate, he sells gifts in Kansas, and he's not in Kansas anymore, but he is a legitimate business owner, and he just happens to be two places. Or you might say, this is not okay, and go ahead and decline that merchant. You, of course, want to know where all the entities are located. You want to make sure that, the links on their website work and their website matches what they say they do. And then there's the very required checks that we all know about for sanctions and compliance, which is typically PEP, OFAC, and MATCH. So once you're done with underwriting, hopefully you've onboarded this merchant. And once that merchant is live within your system, and you're offering payments to them and they're processing volume, you would be required to perform risk monitoring functions on that merchant. And that is both to assess the merchant risk and then also any fraud risk that might be happening, AML, and then also the need to do ongoing merchant underwriting after a period of time, or if there's a DDA change. There's a variety of different events where that may be needed. So I'm going to pop in now to a little bit more detail on who does what. So we just covered at a high level the things that need to be performed in order to keep your program safe. And to people brand new to payments, that might look really daunting. And the good news is that there are models that give you some help. So in addition to the underwriting and setup consideration and the active merchant management that we just talked about, I'm also going to touch on the who does what for regulatory considerations, such as registration and who takes liability for payments losses, the revenue opportunity and how that looks in each of the models, and then who does the sales and marketing in each of the models. So to kick things off, we just talked through underwriting, and you can see here, we always use the referral model and ISO as sort of a baseline because they're very familiar models to people. And so in the referral model, automated underwriting is going to be dependent on who is sponsoring you. And the same goes for ISO. The kind of cool thing with PF Lite providers is that because they're newer companies, many of them, including LaunchPay from Infinicept, have built automated underwriting tools. And in our case, it gives you really strong visibility into what is happening with the merchant. So I gave that example earlier about the address. And if the automated underwriting comes up with issues, the additional underwriting becomes much easier for you in a PF Lite context, because you can say, we know this guy, this is his address, he just fat fingered this number, I'll go get more information. And same thing if you're a payment facilitator using a tool set like Infinicept. And then, of course, automated onboarding. This is sponsor dependent in referral and ISO. Most people have automated systems now, but there are some people who might say it's automated and it might be clunky. And that, of course, impacts your speed to getting these merchants onboarded. And then from a PF Lite perspective and a payment facilitator's perspective, you can and should automate this. And again, shameless Infinicept plug, but tools like ours make that possible without having to do the development work that we've taken the time to do. So that's the underwriting and setup piece. And then from an active merchant management perspective, in the merchant and transaction monitoring, again, in the referral and ISO model, this is the responsibility of the sponsor. I probably should have sponsor / ISO in the merchant and transaction monitoring for ISOs, because there is some shared responsibility there. So update for next time. And then in PF Lite and payment facilitator, this allows you to have visibility into all of these things. So what we're really saying by PF Lite is the PF Lite provider. And so whoever is providing your payments offering, like LaunchPay, would be responsible for all of these things on your behalf, with you receiving visibility. The one really notable exception here is that on both the fees and the funding schedule, when you are actively managing your merchants and you get to the PF Lite level, you will have a lot more flexibility to do things like set your funding schedule and set your fees in a very easy to use way. And that is a big benefit if you want to have a setup where you never automatically fund, or if you want to offer same day or next day funding. It just gives you a little bit more agency over what is happening in your payouts. And then if we go to this next slide here, these are the non-underwriting and sort of active merchant monitoring considerations, and rather take a look at what matters from other perspectives that would affect this business decision. So regulatory considerations, liability is something that comes up for us a lot as we speak with people about selecting the right model. The referral model and for both of these, the sponsor takes liability, and registration requirements are a little bit dependent on the sponsor. For ISOs, the liability is shared, and then there is a registration required, right? So ISOs have policies and procedures just like payment facilitators do. And then in the PF Lite world, the wonderful thing is that the PF Lite provider, like LaunchPay, will take the liability, and they have also done the work of registering as a payment facilitator so that you don't have to, and you'll have the ability to sit underneath them and still offer that branded payments experience without doing the legwork of having to go and register, which allows you to get that speed to market and speed to revenue really quickly. And then, of course, in PayFac world, you will take liability. And as some of you may know, registration is required. Going back to those card brand rules that I mentioned, both Visa and MasterCard have registration requirements for payment facilitators that get updated regularly. And all of these liability requirements really feed into revenue. So as you could imagine, more liability means more revenue. And in the referral model, you'll probably have the least visibility into what's happening. And you will also have have the least revenue, right? The payments company that's supporting you is the one who's doing all the work. They're taking the liability. And as you can see below here in sales and marketing, the software company can market the product and market payments, but once they want to go and sell it, they're throwing it over the fence to that payments company who's supporting them. In the ISO world, there's typically a revenue share. There may be some hidden fees, but they're all in your Schedule A, and it's just a matter of really weeding through to figure out what's there. And the benefit in the ISO model from a sales and marketing perspective is that the ISO can sell and market the payments. And ISOs, again, as you probably all know, offer referral programs sometimes, and they are often more horizontally focused. Whereas when you get to PF Lite and the payment facilitator model, you tend to get towards that more vertical focus where you're marketing to a specific group rather than just selling payments. So think about like customers like companies like WorkWave. They have a vertical focus, whereas an NCR or someone might be more horizontal, say for their Aloha product. So when you move to the PF Lite world, your share of the payments will grow. This is for a couple of reasons. The first is that you are taking on the selling and you're plugging this into your core product offering. So payments just becomes a checkbox in your experience. And you should have the ability, because your payment provider should be providing you, the registered entity, with very transparent fees. And we are very committed to being transparent in our pricing. And in theory, the ability to turn around and do that with your customers will bring a lot of value to your offering when you go to sell it. And then, like I was just saying, all of the sales and marketing is the responsibility of the software company who is sitting under the registered payment facilitator. And then lastly, for payment facilitators, they have the biggest revenue opportunity, and they also have the ability to claim top line, because when you do take on that liability, you can claim the top line revenue. And that is obviously appealing to investors and board members and people who are wanting you to succeed. And then from a sales and marketing perspective, the payment facilitator is responsible. And again, that goes along with all the other things the payment facilitator is doing, more stuff, more revenue. So hopefully this was helpful just in giving a little bit of color beyond the risk parts of it. I think that there are a lot of things to think about when you're considering adding payments. And there are also a lot of great options that you can provide to your client base. So I would be remiss if I didn't talk a little bit about us. And we think it's so important to find the right partner. And we at Infinicept have been working in the payment space for about 6 years now. I'm sorry, not working in the payment space, have been in business for about 6 years now. But the collective expertise from our team is vast. We support our partners in processing $10 billion in payments volume every year across tens of thousands of merchants. And we are helping people earn money every day by providing the tools to power their program or providing the payments offering to get them processing payments quickly. And we, of course, have a ton of experience and have worked around the globe to help people become payment facilitators or learn how to support payment facilitators and other software companies who want to add payments. And just at a very high level, right? I talked about PF Lights and payment facilitators, and it's no secret that we are big fans of the PF Light model and also of being registered as a payment facilitator. But as the market has showed us over the last year, there is a big appeal to the option of having a registered entity provide you with a payments offering without having to go through the difficulty of registration. So I'm going to go off camera for a second. There's a bug in my office. So in both LaunchPay and PayOps, you have access to a lot of the same tools and you need a lot of the same things. So what is important to merchants and what is important to a software company, right? Everybody wants an easy to use portal for the underwriting functions that we talked about. Everybody wants a easy to use back office for the ongoing monitoring functions that we talked about. And of course, you want experts in your corner who know what they are doing. So LaunchPay is a registered payment facilitator, and we provide, we register, and we offer a rate to our clients, and they are able to go and in turn embed payments into their core offering. So we help with underwriting. We will manage that process for you. But again, giving you that visibility into the application and the status will allow you to help us drive forward those merchant applications where there are manual processes required. The back office gives you visibility into everything that's happening with your payments. And then we provide you with a dedicated account manager who can help you with any questions that you have, including things like, hey, how should we price this merchant? And hey, can you help us pick a gateway? And you name it, we're really there to be alongside you the whole way. And our hope is that we can help people graduate. But at the end of the day, what we want people to do is find the right payments program for them. And then from a payops perspective, we offer the tools for you to do the automated underwriting and onboarding. And we offer an unlimited number of customization options for each of your merchant applications, or if you have a bunch of different verticals. And then, of course, you would be using our tools to manage that yourself. So taking over that responsibility. From a back office perspective, the same thing. And then from the ongoing support perspective, right, we're providing policies and procedures. We are delivering updates as we become aware of them to say, hey, the card brands just changed this rule. You need to be aware because of X in your policies and procedures. And then we also offer managed services for the functions above. So you can ride along with us, learn from us, and eventually, kick us out and take over. So I don't know if there are any questions. Andrea, I'm not great at this conference tool. Look in the chat here. Oh, okay. Okay, awesome. It looks like there are not any questions. I blew through this, so if you have any questions after the call, please feel free to reach out to us via email or hop on our website. We're happy to help and happy to connect one-on-one with you and share a little bit more information. All right. I'm going to end the webinar here. Appreciate you all joining and look forward to connecting soon.